Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Young-han, professor of economics at Sungkyungkwan University. Professor Kim, good afternoon. Thank you for coming on today.
Yeah, thanks for having me.
Well, stocks on Wall Street had a rally this week, but on Wednesday they closed lower. Earlier in the session, the Dow was quite a bit higher, but in the end closed flat. Disappointing quarterly earnings from big tech companies like Facebook, or Meta as it's known, as well as Alphabet and Microsoft. What's the story in the global markets?
Yeah, actually, as you mentioned, over the last couple of days, U.S. stock market has shown some kind of upward trends, mainly based on the expectation that U.S. Federal Reserve might take somewhat more moderated policy approaches from so-called giant step to big step in coming November. And so that kind of positive expectation had worked to boost up U.S. stock market for the last couple of days. But that's just an expectation, no real clear visible sign that Federal Reserve will really take that kind of moderate approach. And then the only factors that might influence the stock market would be the kind of so-called visible corporate performances. And the visible performance yesterday and today was quite poor performance of the U.S. big tech, as you mentioned. And those poor performance of the big tech simply reflects that kind of downturns of the general U.S. economies, and also all the good days of those extra gains enjoyed by those big tech during the pandemic is also over. So I think these situations are the rough background why the U.S. market index has shown some stagnant performances.
Right, and Korean stocks, on the other hand, today strongly higher. It looks like retail investors may be taking some profits, strong buying by foreign investors and institutions. More big gains for battery makers LG Energy Solution and Samsung SDI. Tell us about the domestic market.
Yes, as you mentioned, kind of stock market has been closed with relatively sharp, not that sharp, but still positive kind of development, with the index increased by 1.74%. And well, but yes, we might say there is some kind of visible performance improvement of corporate performance. But that improvement is just an improvement in terms of stock index, but when you really focus on the kind of real sector performance of the Korean economy and corporate performance, we cannot say really there is a very strong, solid kind of upgoing positive performances. I would say we can say it's more or less kind of technical response to the kind of improvement, stabilization of foreign exchange markets. So I think we should be more cautious in observing the future development of the Korean stock market.
Well, speaking of foreign exchange, the exchange rate has come down below 14.20 to the dollar for this first time in a couple of weeks. The dollar index, of course, coming down to its lowest level in over a month. So what's driving this move? Where do you see things going currency-wise?
Well, as you understand, the major factors influencing foreign exchange market is we have two factors. That is, first, interest rate gap between the United States and Korea, and secondly, also relative performance of real sector economies between the United States and South Korea. And in terms of those interest rate gap, as well known, the speed of the interest rate hike in the United States has been much faster than South Korea. And as a result, we have observed a sharp depreciation of one currencies. And but however, we have observed a slight adjustment of exchange rate, but it's also mainly based on the kind of some positive expectation that the U.S. monetary policy might be somewhat changed to a somewhat moderated version. So again, we can say this kind of improvement or stabilization of foreign exchange market would be mainly can be interpreted as a kind of development based on the expectation of the somewhat moderated U.S. policies. But we have to see what will really come in coming November. But the more so-called fundamental factors affecting Korean economy is one factor is latest development in Chinese political regime, definitely taking the much more rigid single dictatorship regimes has started to have a negative impact on general Chinese economy. Lots of outflow of foreign capitals. That's a big negative sign on Korean economy too. So I think also we need to keep very cautious attitude with general aggravating international environment, and also Korean domestic economic performance cannot be really interpreted as a really very strong performance. So the kind of appreciation of the Korean won, what we have observed today, cannot be sustained for real long terms when we really think about the kind of development in economic fundamentals.
Right. It does seem like it'll at least be a number of months before we see which way this thing's going. Well, Professor, we'll have to leave it there for today. Thank you, as always, for coming on the program. Really appreciate your insights.
Thank you.